biscuits every day. Rusty's chained to the mines, digging deep day by day. But when Option Omega releases new features, he's free to come out and play option. Omega, you're trading home, where every move makes you feel less alone.
Every move makes you feel less alone, Dan. That's
I've got to think about that a little bit.
I know. I wouldn't say I was drunk when I wrote those words, but I wouldn't say I wasn't drunk, if that makes sense. But, Dan, the small account challenge, we reviewed it. We'll review it again maybe end of week. Got smacked around a little bit yesterday on a gap up, but I was impressed with how it managed the rails. Like Matt and I were talking about it. There wasn't anything that got, just destroyed.
Yeah.
And that's what you want. I mean, again, we talk about this all the time. Can anybody lose 2 times in a row? Because it was well within reason, all the losses yesterday.
Yeah, I didn't. And again, I think sometimes our expectations as retail traders can be unreasonable. I mean, we've had a very, very good for range bound type trading the last 5-6 weeks, or very good. Yesterday was really not a horrible day. I mean, part of it is, okay, weren't we up Friday? Isn't that crazy? I can't even remember Friday. But yesterday was that gap up, right? And then we were kind of range bound to an extent once it gapped up, right? I mean, because 0 day, if you put stuff on early, like 0 day butterflies or iron condors, worked well. At least we saw, you can get in and out of those. But I think the key with Troy that, comes to my mind is it's almost, I think of how many students yesterday, should have had a rail in, right? Let's say they weren't doing automated trading. They missed an adjustment. It gapped up. Dan, it ran quick. You hear that all the time. It ran quick. I couldn't do anything.
Couldn't do anything, Dan.
Yeah. Ask the machine, right? Ask if it got the adjustment when it's supposed to, right? And I'm not saying sometimes, yes, can you have a gap big enough that it blows through where you were going to adjust? Yeah. But I think having a rail, especially on these types of calendars or butterflies, when it gets through, especially double calendar, when it gets too far through the short strike, some of those rails are wonderful. I mean, you couldn't put it this way. Could you have done much better yourself? No, I would have missed it. I absolutely would have been late on an adjustment. So I think it's, and you know what? Here's the other thing. You're less stressed because I think about all the screen time I take staring at the machine. A lot of it is more of a cheerleader, right? Okay, we're up. Come on. Just, I'll do
a little bit more.
Give
me a little bit
20
more
points, please. Come
That's
back
right.
20 points. And
That's
I
right.
promise I'll make, we're making all our, whereas with the machine.
Your candles, you've got your candles in your, Major League.
Yeah. Whereas with the automated trading and again, I don't just, I think people have a difference. It's not just automated trading. Automated trading has been, in the futures market and stuff, right? Haven't they had that for years? To me, I could care less about automated trading if it wasn't with really, really good risk management and tool. And I've never seen many I haven't seen any. I mean, I've seen one that and since Matt isn't here, and if Tom's in the chat, I've got to say it's a world-class back tester. It's a world-class back tester.
Yeah.
And from the pits. Can I get those two in? Not that even in the right sentence. Can I get those in right away for Tom?
I would love to get one of those those guys who do caricatures drawings.
Yeah.
I would love an option Omega, maybe a Christmas theme shirt with Dan as Santa Claus saying when I was in the pits. But
when I was in the
I love it.
Yeah,
have you ever seen the movie Major League, that comedy from the early 90s? I think Martin
a little bit. Yeah.
Charlie Sheen. There's a guy in there who he's a slugger, but in his locker, he has some candles and a little voodoo doll, and he prays to the voodoo doll before each game. And I always think about that's the computer. We just sit here and we're like 20 points. 20 points.
All the wasted time. And that's why I think Matt put it well. He just said, you know what? I have so much free time. I mean, I can focus on other things during the day instead of the trade. Real quick, Troy, not to go off course, but since Matt isn't here to keep us going,
please.
I think of, when you think caricatures or something like that, I think of two people. Frank Caliendo, is he still around?
Oh yeah.
And when he would my favorite in the world of sports, John Madden. When you would see Caliendo do John.
Yeah, so good.
I mean,
so good.
He would go the physical. You know what I mean?
Yeah.
Yeah.
Talk about how much you loves Brett Favre.
Yeah. Oh yeah. How much you love Brett Favre? Yeah.
Yeah. Matt's not here today. Tomorrow we've got a big day. That Rob from Rob and Marie in the community, a professional. I don't know what I'm allowed to say with that, but has made a living making odds. So we're excited to talk to him tomorrow. Dan's going to be out for that.
Yeah, I got a doctor's appointment. I would have loved to. I mean, they're a different. It's
a different animal,
a different perspective. And
no, I'm excited about it. I tell you what, I looked at the automation, the small account stuff. My other automated trades worked fine yesterday. You have up days, you have down days. I'll tell you, this is a little self-help session here, a little group session. I have gotten really good and really disciplined about not doing stupid stuff for the most part, but every once in a while I can't help myself. And there's a stock I saw the other day, and it's called CRCL, Circle, I believe. CRCL. And I noticed that they were up a cool, 500% in the last 2 weeks. And
sell, Mortimer, sell.
Oh my gosh. And it was one of those things where you could see, like GameStop, that the call skew, it was actually flipped. Like there was so much call skew compared to put skew. And so Monday I was looking at it, and you could get 150 points out of the money for this stock was like 250.
Wow.
You could buy a 500 call or sell a 500 call for $1,500.
Oh my. $250 out of the money.
Yeah. It was insane. So I say to myself, well, I'm an options guy. I know what to do here.
Oh, sure.
I'm going to sell just a classic double calendar. I'm going to do a double calendar far away. I'm going to set it up to where there is no tent of death because there's so much premium in these shorts.
Yeah.
And if I would have showed you the graph of what that trade looked like before I put it on, I have to imagine everybody in the room would have said,
probably the best graph you've ever seen.
A tremendous graph.
Yeah.
Many people had said that is the best graph they've ever seen.
That's the picture of a double calendar. When the kids ask, what'd you do for a living? Have a double calendar over the mantle, say,
over the fire.
Graph? That's why.
Man, that's actually a great Christmas gift. Is like a quilted option Omega back tests.
With a DC.
Oh yeah, you could order your own quilted back test. Man, that might be Daddy's little side hustle for Christmas. Yeah. Anyway, so I put on a number of these.
Oh, you did? You jumped. This isn't just a story. This is a story that actually goes further.
Yeah, it goes further and much more down.
Wow.
So that was the height is when I looked at the graph. It only went downhill from there. So I put on a number of these things because I was so happy with the structure. There's no pit to death, so much premium, blah blah blah.
The visual.
It proceeded to immediately lose money. And there was no ever getting out of it for break even or profit. And this is what happened, Dan. They kept pumping short premium. And they were actually inversing it. They were letting out a little bit of the premium in the longs and pumping the short. It's like the worst.
So you're in this. It's like you feel like it's going against you and you can't get out. You're just watching. You're watching the walls close in on you.
Yeah, and so end of day Monday, I thought, well, I literally have like 2,000 theta on this thing. I was like,
oh yeah,
and we're nowhere near the danger zone on the strikes.
Right.
And so I thought to myself, well, don't be stupid, just wait. And so I waited. And then the next day, yesterday, it just continued. It just went. And then basically what happened yesterday is they took almost all the premium out for Friday, but also took almost all the premium out for the following Friday too. And so it just everything that could go wrong with the double calendar went wrong with that trade. And I waved the white flag about 10 a.m., 11 a.m. It hurt, Dan.
Did you see what, as you investigated a little bit, was it a merger earnings? Was there anything crazy, or is it?
So the stock itself is like basically a crypto type of a bank that invests in crypto. This shows you how much I do my research. I just look at vol.
Yeah,
look at vol.
You know what? That's how most people have done it in the pit. Guys would be like, "Yeah, I got a big position. What's the stock? I have no idea what it does."
I don't know what it does. Yeah. But I think I read this morning that Cathie Wood of ARK fame exited the position. And so everything just went downhill. So shout out Cathie Wood. Thank you for your service.
Yeah,
Thank you for teaching me a lesson. Again, reminding me. So no more of those. If it's too good to be true, sometimes with that premium stuff.
Well, Troy, if people look at double calendars, it's kind of using earnings as an example. You do it around earnings, you look at these graphs and you say,
oh man,
it's like, why don't they just give up and give me the check now? Right? It looks unreal, but when you analyze it and look at it, it's exactly priced the way it should.
That's exactly right.
The shorts are going to cut, if you do a double calendar right before an earnings situation, yes, everybody will say, look at the graph. It looks wonderful. Yes, because the graph is basically saying all the volatility of the shorts come out. What the graph doesn't do, at least in certain ones like Schwab or whatever, it leaves the long volatility alone, why it looks so good. But if you look at, if you lower the long volatility 10 or 15 points, which it will come down probably after, I'm just giving it a thing, it doesn't look so hotsy-totsy as they say. It doesn't. So it's like, there is something to be said about it. If it looks too good to be true, usually is, but sometimes they can. Sometimes they're hard to figure out. Like this one that you looked at, that wasn't an easy one, right? I mean, to see what, you're trying to figure out.
No, but you know what was easy? I mean, there's things that there's some mystery to that one that I think there's some bad timing involved in it on my part. But then two, there's no mystery in this sense. I didn't break my account or anything like that, but looking back, I did oversize something that I really had no business oversizing. Like I should have just took any discretionary stuff to me at this point. It's like there's no reason to put any large amount of money into it.
But those can be very alluring, right?
My gosh!
It's like you go into antique shop and you look at this painting and the person doesn't know what it is and selling it for $20 and say, it could be a Rembrandt. Maybe they made a mistake.
That's right. That's
Maybe
exactly
they
right.
made a mistake.
That's exactly right.
I've got a Rembrandt. I was just thinking because you had brought up on double calendars, and you said sometimes when you're starting a 20 delta, or let's say 20 delta put, 15 delta call, regardless of the vehicle, Qs or SPX, that middle is going to be sagged, right? When you say the T+0 line should be right there at the profit, and people will say, and to me that's a good discussion. I'd have people say to me, well, Dan, why you don't want to do a, whether it be a double calendar, double diagonal, whatever, you don't want to do it when the sag is in the middle. Don't you want the sag up? And they're looking at just from a pretty aesthetics, is that the word? A visual. They want it up higher. I'm like, well, when would you want it to be low like that, like in the middle? And part of the answer is I want more room, right? I want more room, but to me the main question to put on is, am I confident in the volatility to a degree? Like if you said to me, Dan, if you put a 15-day 15 delta double calendar on today, or 10, and even if it went a little bit under the zero line, I'd say I'm not that concerned with VIX at 17. Yes, it could go lower. I'm not saying it can't, but I'm less concerned than if we were at 22 VIX or 23. So it's
well, especially these longer dated, some of the stuff we've been looking at with the small account challenge, like
longer
1128, 1428, 923, stuff like that. You've got so many days of just positive data. You're probably going to realistically be out of that trade long before any sag starts forming in a VIX environment like where we're at today.
You're right, and I think that's a good point, Trey. That's the key difference, wouldn't you say, between maybe a 2-day DC versus a 10 or 15-day DC. It's just easier on the heart too.
It is
times, and that's why I think it's just good what you guys do a lot is to diversify the DCs. You're putting them on different days, some different durations, and I think that's a great plan.
Well, speaking of great plans that were great plans, I'm gonna look at something. I went back into the archive because I've noticed this about a couple of trades that I've been looking at, and now this one, when this was running, this was named, I named this personally, the Sheridan Batman.
Wow.
But the last year, I'm going to change it to the last year's results. I'm going to change it to Troy's Batman because it's a crappy Batman. But I want to look at it and show you kind of what we're looking at here. So let me do this real quick. Can you see my screen?
Yes.
Sorry, I was sneezing. I almost missed that sneeze. I think I got it. Okay. So this is a Sheridan Batman. Now, why is this a Sheridan Batman? Probably, again, this is not like something I want to. I'm thankful for the show. We have people that are like, hey, what is that trade? So I can immediately full port that trade, give 100% of my allocation to that. So just a heads up, Dan does not endorse this trade. This is me as a fan of Dan, studying him and thinking about ideas. So it's called the Sheridan Batman because Dan's my mentor, and this is my trade, if that makes sense.
Troy, have you or Matt got a patent on the word full port? I love that.
I love that.
Full port. Yeah, that's a good
in ATV world. My son likes ATVs a lot. In ATV land, they call it send it.
Oh, is that
whenever you want to go just full speed, just send it.
Send it. I love it.
Anyway, so what is this trade? This is SPX, and as you can see, you couldn't actually automate this because we have 6 legs. And what this is a put butterfly and a call butterfly. And both 25 delta short, 5 points in the money, 50 points above that. So it's a broken wing butterfly on both sides. You allocate 10%. You're doing it every day, first thing in the morning. The guardrails are you exit when the put is tested at 5 points in the money, or call is tested 5 points in the money. Got some slippage. Who knows if it's realistic? I've never actually traded this. So, but here's what's interesting to me, Dan. If you look at this graph, I'm going to break this up because I think it's super interesting. Almost all of your performance has come at the point probably about right here when I first started looking at this, and thus I saved it.
Yeah.
And I hadn't looked in this in like 2 years. So
yeah,
this is about 2 years ago I stopped looking at this trade. And one of the things that's interesting is I'm going to run this real quick from dailies till basically that first year. And I'm going to do it with so take away basically the stagnation and see how it performs. Well, as you can see, if you saw this trade, you would be really, really happy with this trade, I think, right? Like a 10% allocation, a 19 MAR, which is really impressive, a ton of trades for this type of trade. So, you know, a lot of data, and, you know, you win 62% of the time with a pretty low drawdown, right? That's pretty good. And how's this working? Well, because you're collecting a credit for each one of these butterflies. And so you're winning most of the time, even if it doesn't do anything. Really, the only time you lose is if we have a move up really, really fast. So you see like July 6th, you know, we went down, you know, relative to the delta. We went down pretty fast, and so we got stopped out. Dan, before I look at the stagnation part, what is your take on this? Why is it? Please don't be offended that I named it Sheridan.
Anything with Batman is good with me, Troy. I mean, it's good again when you start getting in these 20s or under deltas, whether it be like this is a double type fly versus a double calendar, right? And I mean, I think it's fine. I mean, the only thing, you know, as far as tweaking, the first thing I'm always thinking, you know, how to lower the margin on a trade, right?
Yeah.
And I'm just thinking on that 50, I don't know what the data would show if the 50 went to 40, or we're generally going up. If you not only, you know, step one, would you lower the 50 to maybe 40, but the other one is, could you, you know, lean a tinge long delta, you know, could you make the upside 40 and leave the downside 50, or play with that a little bit. I don't know if that would make much of a difference.
Well, that you're thinking about it exactly the way I wanted to kind of present this. Is Steven said it. There's a lot of trades if you've been using Option Omega for a while. 2022 was a great year for a lot of trades.
But this starts the tail end. When did this start in 22? This test? It wasn't at the beginning, was it?
I'll look here in just a second.
If I remember,
running May, I think it's daily. So.
So that's fine. Yeah, May, because it was 22 didn't start turning around. It went down till maybe October, right?
That's right.
So this had the high vol for a while, and
that's right. Let me flip this real quick because the stagnation part is the part that we want to try to fix. And so
right.
I'm gonna go 7, 13, 23 till yesterday. And as we'll see, I think a lot of this was stagnation, and trying to show just basically, some trades you just have to give up on, and that's okay.
Yeah.
Some trades can be improved as the market changes, and maybe your overall MAR goes down, but it's a much better trade,
Yeah.
And so this is what it's done the last 2 years, So that's not impressive, obviously. No. And so the thing I think about is, put it in chat, you can help. What happened? That's my deep philosophical. The thing I'm thinking about, what went wrong? What happened? What happened to where this type of trade would suddenly just start faltering? And you try to start thinking about all the things that went wrong and then go from there. And I'd be interested. I don't know. Give the chat a little Jeopardy song.
And the only two things really you're dealing with is what price and vol, right?
That's right.
So you're dealing with, okay. And that's why I think sometimes it's also helpful looking at the Greeks of the trade when you start, that type of thing. Because if you look here, we had a lower volatility environment, wouldn't you say, mostly during that period. And from 23 to 25, mostly trending up, right? Versus the killer environment that helped us at the beginning was just the opposite. High vol market going down, right? Is that
Yep.
I haven't looked at a chart on that.
Well, 22, we had that 20 VIX regime that just kind of stayed.
Which was nice. Especially for, this is a short Vega trade too.
That's right.
So you like that high vol, especially as it comes down.
So that one thing I changed in my mind is a huge clue to this is, now you go a tenth of the trade you're doing, but basically this shows it. You put on 1,000 of these basically as it stands, but then suddenly you say, I'm only going to do this when the VIX is 20, and you've cut down. You're trading a lot less commissions paid to your brokerage, but a lot more money. And so we're on the right track for that, right?
Could you get by with a VIX 17?
That's a great question. Try to get more instances.
More instances, yeah.
Yeah. Today, side note, while we're loading this, week 2 of Options with the Boys will be coming out later tonight. So Get ready for that.
The boys.
All right.
That didn't really help it, did it?
Doesn't help too much.
So 20, yeah.
So it really does. And we're going to do this. We'll finish this tomorrow, but this is my guess, Dan. I have a theory, and this actually could fail spectacularly. I was trying to explain this theory to Rusty the other day, and he was like, dude, you need to get off the wacky juice. I was like, I'm just drinking coffee. And he's like, well, then something's just wrong with your brain. Because I have a theory, and if anybody wants to test this and save me a lot of time, I would love that. But if you added, for instance, I'll just show it real quick, the idea without testing it a lot. I'm going to add a put, and I'm going to go 1 DTE, and I'm going to do 50 delta, and I'm going to add a call, 1 DTE, 50 delta. Now, I'm not going to go through all this, but basically I have a theory that one of the more powerful filters we have is the short-long ratio. And I have this theory that if you traded this when days when perhaps there's an elevated, the short-long is larger, basically indicating that there's a lot of premium in the expiration, that maybe there's some juice there on a day-to-day basis. And you could use that as a proxy instead of VIX. Does that make sense at all?
Say that again.
That's tough. I don't know. So we use short-long ratio all the time, right, for our DCs. And what are you doing? You're trying to see if the premium, today's premium divided by the long's premium, is if there's any juice in the shorts,
Right.
basically. Well, instead of using VIX, if we set up like a ghost, basically ghost legs of a longer dated premium one day out,
Yeah.
and then we did short long to say, is there any juice in today's expiration, and use that instead of VIX.
It's worth it. Yeah. I mean, it makes.
I mean, who knows? It could fail spectacularly, but I have
I
this.
see where you're going. It makes.
Yeah. So, but I'm not going to do it live. I'll say that because
Hey,
I'll look
Troy,
like an
can I
idiot.
do? I don't know. Do we have a minute?
Yeah.
What if we did? Okay, keep your 20. What if we did this? What if we keep the 25 delta, but just make it a 30 wide balanced butterfly? So the 25 delta, you're taking your longs, just going 30 points either way
Okay.
on the call and put. So 20, so just 30 wide, no unbalanced at all. I'm just curious what that would look like.
Mm-hmm.
That would bring the margin down, I think.
Yeah, I think it's going to make it a debit trade. Where's your?
Oh yeah, definitely would be a debit trade. Yeah,
but it's interesting to see. Yeah.
No, 50.
Oh, I have the min VIX. Hold on, let me take that VIX off. This is long after everybody's asleep. I'm just in my lair at night, just running back tests. So
listening to Led Zeppelin in the background.
Oh yeah, just screaming.
Wow, max drawdown 80.
Well, and the reason I think is just because, it's just such a completely different trade, because at that point you almost want to, in my mind, take the underlying movement off, because you've got so much debit that you really don't matter if it goes past it at first.
What do you mean the underlying price?
So right now we had it to where it's like call tested, put tested.
Oh, you took that off. Okay.
But I took that off just to see what would happen.
That's true. You need that more with the broken.
Yeah.
It still doesn't.
No. But listen, I like the way you're thinking about it. I think
one last thing. I know we're going to be taking this into the bell. If you kept the 30, but just make the delta instead of 25, take the delta down to 15. The delta of the shorts. I have a feeling it might have been too much, but we'll.
No, I like it.
I was trying to get the probabilities. Our win rate should go up. Just
yeah, that's 15. Right. That's right.
Delta, but we'll. Wow, no, win percentage went way down.
No, but
what did I say? Back to the drawing board.
Yeah, back to the drawing board. But I did something way wrong on that, though. Oh yeah, hold on. I'm being stupid here. Okay, let's try this. I was using an old test where we were still doing that 30 broken wing with that. So
now is this totally? Is this 15 delta but 30 wide on both sides?
No, I took that off. So now we're back to that original idea of collecting the credit, but we're just moving the deltas back.
Okay.
From 25 to 15. To see what's going on.
Now you're trading. You're getting probabilities, but you're giving away.
That's right.
Volatility. Yeah, because you're going to have more of a sag in the middle.
So you win. Yeah, you win more. But I'd have to dig into it.
Yeah.
It's like you want to collect that credit is kind of like the main part of that trade. And then it's basically just an iron condor with a little bit of kicker. I mean, that's what you're kind of doing.
Yeah.
Listen, this is what I'm going to do. I'm going to share it. You guys run with it.
Back to the science lab. Back to the
That's right. Maybe that's right. Back to the lab. Maybe it can't be improved, but I thought it was interesting just noticing that and being like, well, this is definitely stagnated. And you see that happen a lot. And, I never want to abandon something just flat out that had worked so well. So in my mind is trying to find why did it work so well and going from there.
Oh.
So, but guys, listen, happy trading. I think the market is up $8. We're rallying continually now. Yeah. I think if you liked sitting at a 6,000 level for 3 weeks, you'll love the 6,100 level.
6,100 has much more amenities.
That's right. That's my theory. So, all right, guys. Well, listen, have a great trading day, and we will talk to you soon.